All you need to know about the Tesla stock split as well as a chart analysis of the past week's performance in a single video. That's right, stay focused for the next few minutes, and before we get into the video, subscribe to our channel Stocks 101 for regular stock market updates. First, I'll quickly explain why they split the stock. This is John and he makes $3,000 a month. He loves Elon Musk but he cannot invest in Tesla because a single share costs $900. But after the split, John can buy one share every month at $300, hence benefiting both John and the company. The split was approved by the shareholders in the AGM held on 4th August and it was in effect after the 24th August market closed. But what do analysts have to say about the split? Most analysts, including myself, are bullish on this move, since Tesla clearly has maintained its momentum with improved production capacity thanks to the Gigafactory in China. Tesla's delivery times have been one of the biggest problems for the company so far, but they're working hard to cut the delivery times now, and this should help the stock grow as well. Going back to the August 2020 stock split, Tesla shares have grown by 43.5% ever since, and we hope the same for the future. With that out of the way, let's get straight into the charts. So as you guys can see right here, we are now in the one-day chart for Tesla. First, we'll analyze it in this time frame. Then we'll move on into the 1-hour chart. And to end it off, we'll get into the 5-minute charts and analyze the stock real time as the market trades. So as you guys can see right here, this is when the stock had a split, a 3-for-1 split. And ever since then, the price is now $291.5. I did already give you guys some levels in my previous video, but as you guys can see, the split kinda messed my analysis up. So I'll just give you guys some levels now. The first level I want to give you is probably this roof over here that we touched recently. Let me get the horizontal line real quick. This is pretty much the $315 level. We've been testing this resistance for a long time. As you guys can see, we were stuck here around this February period for a long time. Then we got support here at the same spot. Again, we got support here and we got support here as well. And we got support. Okay, we didn't get any more support from this level. Next resistance level would probably be somewhere around over here at $280, I'd guess, because as you guys can see, we've already tested that many times. The next support, or rather the next resistance, would be somewhere around this range of $250 to $260 because we've tested that many times over here as well. Next level would be somewhere around here. This is the base, or rather the support, around $200. The next support would be somewhere around this range at $225. And the current most important support would be over here at this level where we recently made a low at $285.9. If we look at the EMA, as you guys can see right here, we are now about to hit the 20 EMA and we have crossed the 20 EMA on the lower side. Now, as a rule, whenever you cross the 20 EMA on the lower side, you would probably end up somewhere around the 50 EMA. Now, this is not something that works 100% of the time, but it works like at least 80 or 70% of the time. So make sure you keep that in mind. If you break it on the upper side, you'll get to the 50 EMA as well. If we were to observe the trend, we can clearly see that first we had halted this bearish trend over here at these support levels. Then we went into a bullish trend, and somewhere around the news of the stock split, we halted again, got support over here at this level. Wait, let me mark this level as well. As you guys can see, we've gotten support at this level twice. And after that, again, we went up, made a higher low over here. And then we failed to make a higher high and we've started going down. I personally believe that this might turn into a short-term bearish scenario, and I'll explain why. If we were to observe the candles over here, we can clearly see that most of the days the bears have been winning. And out of that, you can see that most of these candles, let's say this pin bar candle over here, buyers tried to go up, but again, bears had a lot of pressure and they brought the market down. Now, again, as you guys can see, buyers tried to take the market upwards, bears put a lot of pressure and the market went downwards again. Again, buyers tried their best, but the market went downwards today as well. And even before this particular 4-day fall, we can see that this was pretty much the same scenario, right? Bears were pushing and buyers were trying to hold their stance as well. Bears were pushing, buyers were trying to hold their stance, and pretty much the same thing. Now, if I were to make a short-term and a long-term scenario for this, I would probably say that the stock would come back at these levels over here and over here. and would probably wander around here for some time. I guess it would be range bound over here between the 285 and the $275 level. And after that, we might see it break up on the upper side if we get some positive news. If we get some negative news, it might break the support level, and then we might get into the lower channel as well. But in case of a positive scenario, I believe that we might be able to get back on our foot soon. And once that happens, we'll probably first break the $300 psychological level. So let me mark that as well. This would be the $300 level. We'll first break that. And after breaking that, we might again travel in this range for some time, break the $315 level. And after that, we might get into a bull run up to the $330 level provided by many analysts. Now that we've completely analyzed the 1-day chart, let's quickly head into the 1-hour chart. So as you guys can see right here, the bears did make some engulfing candles in the 1-hour chart over here. Wait, over here and over here and over here as well. And wait, let me just use this control thing. It's not working, never mind. Wait, it is. So as you guys can see, there were some engulfing candles over here, over here, over here. Wait, this was not exactly an engulfing candle, but it did show us that the bears had strong support and they were constantly trying to bring down the market. Now what happened was an intraday move over here. As you guys can see, the market fell down. The intraday scalpers and the small short-term traders thought that, hey, we can get a buying opportunity over here. So they bought up the stock at the lower price and then they sold afterwards, and some sold in the post market. That's why, as you guys can see, the pre-market opened lower on this day on 22nd August. After that, it went into a bullish mode and people reclaimed the spot of the $300 level. After that, again, as you guys can see, some engulfing candles, not exactly engulfing candles, but they're pretty much the same thing. But now if we talk about today, as you guys can see right here, the entire market has again started in a gap down, a small gap down, I'd say, and then we constantly went down. And this is a pretty big sign of strong bearish support. As you guys can see, we went all the way from over here at $298 pretty much down 2.5% to $290. Now to see what's going on over here, let's quickly jump into the 5-minute chart. Right off the bat, when I opened this chart, I can see an engulfing candle over here, which obviously failed at the $300 level that I gave you guys. And then you can see that, well, it has been falling ever since then. I guess we are seeing a halt over here to the bearish trend since this candle stopped over here as well. So let's quickly mark this level. It might be of some significance at $290, but we've broken that as well. So I guess not, right? As you guys can see right here, for the past 8 or 9 candles, there have been only bearish candles and just one small, I guess, hammer candle or something, doji candle or something. And now, as you guys can see, again, as I told you guys, the $290 level, we took support from here, and now we're trying to form another bullish trend, but it would probably just be a small setback, or rather a refreshment for the bulls, and just the bears are going to take a nap or so. And as you guys can see, it would probably continue the bearish trend from here. We would probably get 1 or 2 green candles, and then we would continue the bearish trend down into the $285 range. And once we are in there, again the same thing would happen, and I'm guessing that the day would close somewhere around $288. So this would be my price target for the short term. And for the long term, I already told you guys that my price target would be up here at $330. With that being said, remember that this is not financial advice, since this is just my own opinion. If you like my opinion and my analysis, be sure to hit the like button. If you do not like it, be sure to hit the dislike button so I know that. And as always, subscribe to our channel Stox 101 for more such videos, and I will see you guys in the next one.